Hello everybody, it's Les. Happy spring to you, or happy soon to be spring. Man, what a rough winter it's been here in Charlotte. As many of you know, I'm kind of glad to see the end of this coming. For sure, looking for some I don't know, birds chirping and things like that. But hey, it's spring and it's also tax season, and that's the purpose of today's video. We had a couple of new exciting things around here. Les, myself, and Tori have recently acquired our tax planning certified professional designations over the course of the last year, really, which is a pretty intensive course about how taxes impact us across the entire financial planning landscape. They have some pretty deep and thorough tax planning ideas and knowledge that we think is super helpful across the team. Now, we share these ideas. We do a lot of planning around here as a team. We get different opinions, and so we will sow the seeds of tax planning throughout the rest of the Yellowwood team, just so you know. So what does all this mean? I think it's important to know that, and I'll talk about this a little bit further in the video, that taxes probably are even more of a bigger deal than you might think. The idea of tax planning is to keep more of what you earn. And when we're busy working and saving and all those things in our younger years, we don't necessarily think about it a ton. But what we're realizing around Yellowwood these days is we have a lot of folks retiring, preparing for retirement. And when we start to run the numbers and do the projections, you start to really see the big impact that taxes can have, especially as we get closer to retirement. And so we felt like it was a good time to deepen our knowledge around here, and very glad that we did that. With tax planning, the biggest tax decisions historically have been around April. And everybody's kind of scrambling right now, myself included, to prepare documents, get documents in the mail, get those ready for either yourself to prepare your own taxes or to get to your CPA. And then we're hot and heavy for taxes. We either get some money back or we make a payment, and then we just kind of like, ooh, that's over. We don't have to think about it anymore. And actually, tax planning is a year-round sport. Now, around Yellowwood, tax planning's been a big deal for us for a while. We just felt like when the certification became available to us, we thought it really makes sense to go through that formal process. But throughout our planning work, we're always considering taxes in the background. And I think many of you know that, but we're trying to get even better at it, because as the population gets older, as more folks start to retire, this becomes an even bigger deal. Now, historically, tax preparation, which is what many of our CPAs and accountants do these days, that's backward looking. That's kind of, hey, this happened in the past. We're either going to get a refund, or we're going to have to make a payment, and then we're kind of done until next year. And many CPA firms and accountants, and I think some of them would readily admit, they're so busy doing returns these days that there's not a lot of time typically for tax planning and getting ready to study kind of tax impacts that might happen throughout the year, so that next tax season maybe is a little less painful than this past year. So that's the process that we're using around Yellowwood these days. Taxes impact a lot of different things, which I'll touch on in a minute. But if you think about it from a lifetime perspective, your taxes paid might be your single biggest expense in your lifetime. And I mean bigger than your mortgage payments over time. I mean bigger than college costs over time. Bigger than healthcare expenses over time. These are already very large numbers. The amount of tax that we'll pay, especially on retirement accounts later, can be really, really significant. So that's why we're always continuing to get better around Yellowwood on the tax ideas. So I'm going to highlight some of the things that taxes impact, and we're not going to get into the weeds today. But if this spurs any thoughts or conversations you want to have with us around tax planning, obviously please reach out to your relationship manager, myself, Jason, somebody at Yellowwood, and we can start those conversations. The big thing is, 2 years ago, I got my retirement income certified planner designation, which was a big deal also, right? And the idea of that designation was, how do we pay the least amount of taxes we can once we retire? Because the IRS is, in fact, your biggest business partner at that point. So the required minimum distributions that we have to take out of primarily IRAs, sometimes 401ks, the tax hit on those can be quite significant. Now, a few years ago, the RMD age started at age 70 and a half, you may recall. Now, based on your year of birth, it's either age 72, 73, or for the younger folks in the audience, age even 75. And that sounds like, hey, now my money can grow tax deferred even longer, and my nest egg can build up even bigger. That sounds like a good idea until we have to start paying the tax bill. The problem with that extension is that we're older and we have bigger account balances, typically speaking, so that when we have to start taking the minimum distributions, they're even much larger than we anticipated. That can even put you in a much higher tax bracket in retirement than you've ever even thought about was even possible, to be honest. So that's a big deal. Social Security timing and when you take Social Security, or what types of income you pay your bills with and when throughout your retirement. Taxes are a big part of that. Of course, capital gains and losses when we're selling things in a portfolio, that's a big tax consideration. Another thing that's really gaining in popularity, you're hearing us talk about it around Yellowwood, is charitable giving. We're seeing more and more of the boomer population wanting to begin to give money to either charities or to family, and there's some nice tax deductions that can be had by doing that. So we're factoring that into the picture a lot more than we ever have. Taxes and your tax bracket have a huge impact on Medicare Part B premiums and how much you pay for your Medicare Part B. The price of Medicare Part B can go up significantly the more income you're showing. And we're finding that a lot of our retirees are ending up in higher tax brackets than they originally thought they would be in. And then lastly, I would say with the great wealth transfer from the boomer generation to Gen X and to the millennials, estate taxes are being discussed more than they ever have. Now, right now, each one of us has a $15 million exemption per person. So quite honestly, there aren't many Americans right now that face any kind of an estate tax bill, which is a good thing. But however, tax law is written in pencil, and year to year that can change. So if that $15 million exemption ever came back down significantly, a lot of us could have an estate tax problem. So we're always kind of keeping an eye on what legislation we think may be coming. And if we need to make some adjustments ahead of time, we can do so. So those are all the ways that taxes impact your overall financial plan. There's a gazillion more that we could get into, but I wanted to kind of highlight and just put in your mind that if you think of things from a tax perspective you want to ask us about, please do. It's a big part of the planning process. We can always get better at Yellowwood, and we'll keep getting educated on these things as tax laws change. So anyway, hope everybody will soon have some sunshine and warm air, and we'll see you in the next video.